All right. A very good morning to everyone on the call. Welcome on board, and I'm happy to have you all in today's morning class. I hope you guys are good. I hope you guys are well. I hope the market fared in your favor yesterday, and I hope you guys enjoyed some money trading. Yeah. So because yesterday the market was actually fair, if not good, and most of the trade entries many people made yesterday, I believe you were able to exit out of it successfully. Yeah, so because the market fared very well. So Bitcoin going past 100K. And yeah, that was a good move. And the best is yet to come. We're saving the best for last. And the market still looks and seems very, very good. Very, very good indeed for BTC. That means seeing us in the remaining days prior to or before the inauguration of Donald Trump, we should expect the market to dingo. Expect it to be very volatile, and yeah, which is a good thing for us. Shall be important to make something from the market. We shall take advantage of that. So, Leader Julius, good morning. Hope today you'll be so much available so that in case my network interrupts, you'll be in position to quickly get me on. Yeah. So, I wouldn't wish us to waste a lot of time today, but rather dive directly into what we're supposed to share this morning. And we're going to pick up from where we actually stopped yesterday. From our yesterday's class, we were actually looking at one of the indicators, and then we got interrupted by the network. Okay, so I hope before I can get started, my audio is very clear. Please confirm that my audio is clear. All right. So if I'm audible enough, I think we can continue. Yeah, we can get started immediately. Okay. So you'll permit me to share my screen and see how we can get on. Hmm. Okay, so let's go through the class. Let's go through the class. So let's look at let's see what we are going to look at today, which is one of the indicator that we had started about yesterday before we got interrupted network. Okay, So the indicator we're going to look at today is called the MACD. It's called the MACD. MACD, and I think let me just go and get it from the chart, pick it up from there, and then we discuss it at length. So I'm going to load it on the chart like that. All right. Now, the MACD is one of those indicators that is mostly used across the different financial markets. Okay, it's used across all the financial markets, be it in Forex, be it in trading stocks, also, and then the bonds, indices, those who love trading the boom and crash. Like it's a cut across indicator that you can employ to help you analyze the market. And majorly, the MACD helps us in doing about three things. And the first thing that the MACD helps us, that it helps us to identify the trend of the market. Okay, that is the first. That's one thing that the MACD helps us in doing. And then the second thing that it also helps us in doing is that it helps us determine the momentum of the market momentum. Okay. It helps us determine what we call the market momentum. Now, somebody may not understand what a market momentum is or what a momentum is. Momentum simply refers to the strength or speed at which the market price would be moving in a particular direction. And this can occur over a period of time. So that's speed, okay? The speed at which the market price is moving, or in a particular direction, being it uptrend or a downtrend, is what we call the market momentum or price momentum. Okay, so it helps us. The MACD helps us to identify or have an insight with regards to how the market price movement strength is like. Okay. Now, the third thing that the MACD helps us in doing, at least it helps us to identify those potential price reversal areas within the market. Okay? Remember we said that the market never moves continuously in a particular direction. There will come a time where we shall have a reverse of what the trend was previously. Okay? So it helps us in at least identify some of those potential price reversal levels in the market. Okay, so those are the three key indicators or aid that the MACD helps us in when we're doing our technical analysis. All right. Now, the MACD has some features, as we would see here. If you look at the MACD has some components. All right. It has the moving averages, which we call the line that tends to move parallel or sometimes crossing over one another. Now, these lines are into two types. There is one which is called the MACD line. Okay. Now, MACD literally refers to moving average, convergence, divergence. Okay. So there is a line that is called the MACD line. All right. And the technicality there is what I may not wish to go through, but just to give a small highlight, it helps in just showing the difference between two moving averages and the signal momentum, right? But it's the most important and significance of you knowing it is that how it behaves to give you a signal of what you intend to do with regards to your entry in the market. That is the most important thing. The technical bit, how it is calculated, may not be so much applicable to you, okay, who is so much into the applied scale in trading. So the MACD line is one line that we the MACD indicator. Then you have what we call the signal line. Okay, right? Those are the two lines. Now the MACD line is actually in the default form the blue line. So the blue line is called the MACD line, okay? Then the signal line is actually this other one, which is yellowish or brown, okay? That is what we call the signal line. Now, the MACD has, let me just, sorry. The MACD has also a zero line, all right? You know, on how is it called? Integer. Is it? I quite don't remember that math very well, but there was okay, the axis. I've tried to remember the axis, the y-axis, the x-axis. If you remember something like this, anything is positive. Anything that is below, sorry, anything that is below is negative. I don't know whether you remember this axis. So this was the, where was the y? The y is the, is it this one, is this one the y? And this one the x? Hey, I don't remember that math very well. Eh? Hey, I only remember, but I recall only money-related things. This one, yeah, that to me were irrelevant. I don't quite remember them very well. But though I got a distinction one in math. Now we're into the applied. So yeah, you would remind me, is this one the y? Which is the y, the vertical or the horizontal? Let me get in the chat. There's something, there's a point I want to make. If you remember your math very well, which one is the x, which one is the y? The horizontal is the x-axis, okay? And the vertical is the y. Oh, that's good. That's good. So, yeah, so that horizontal is the x, and the y, Yeah, then you guys can remember your math. I don't know. Are you applying it? Hey, are you applying it? Are you applying what you learned in making money here? Okay. So let's come back. So when you look at that when you look at the two lines, the vertical line, which we refer to as the y, and then the horizontal line, which is the x-axis, all the numbers that are on this side were regarded to be, is it negative? Then all the numbers here were regarded to be positive. Okay? So, literally meaning that when you look at the MACD has a horizontal line, what we call the x-axis. And this x-axis has these labels. Okay? Any area above the x-axis is positive. Any area below the the x-axis is negative. This moving averages, all lines move in and about this line, the x-axis, which is a 0% line. It is a zero line, in other words, it is a zero line. So this two line tends to move, move about that line, okay? Now, on that line, I believe that you can also see some bars. Other bars are below the line, others are above the line. These bars are what we call the histogram. Now, these are mathematical terminologies. They are bars, in other words, in a simple term, it is a bar. Okay? It's a bar. So the MACD indicator also has the bars. Okay? What term there is called histogram. Now, these histograms are divided into positive histograms. Okay? Are divided into the positive histogram and negative histogram. Positive histograms are all the histograms we see above the zero line. Okay? Above the zero line, all the histogram, all bars above the zero line are positive histogram. And then all the histograms, all bars below the zero line are negative histogram. Right? Comprehended? Now, what about this histogram? Now, these histograms actually are printed. Those that are above have a significance. There's why they have an indication with regards to interpreting the market. Even those that are below, which were referring to as negative histogram terms market. Now, all the bars that are above here, okay, that are above indicates a bullish momentum. In other words, the bars represent market momentum, or what you call price momentum. If you recall, I said momentum simply refers to the strength, okay? It refers to the strength, or if you don't want to call it strength, you can also call it the speed of market price movement within a particular direction, okay? So this bars or histogram helps in calculating market momentum, okay? They help in calculating the market momentum. Now, all the bars that are above the zero line indicates a positive momentum, which is a bullish sentiment or a bullish market situation, okay? They represent the bullish market, okay? They represent the bullish momentum, or you can call it a sentiment. Okay, it just shows you that the market price is on an upward movement, an uptrend. Then all the bars that are below the zero line here, okay, all the bars that are below the zero line represents a negative momentum. In simple terms, it indicates a bearish momentum, right? It shows you that the price or the market price is on a bearish movement, or it's in a downtrend movement. Okay, so that is the most important thing with regards to the location of this histogram. Now, if you check on this histogram as well, you will realize that they also have varying sizes. Okay, yes, they help in determining momentum, but at the end of it all, because they help in determining momentum, they will also tell you or give you a signal with regards to the strength of the momentum. Is it increasing or decreasing? The longer the bar, or the longer progressively the bar increases, it also indicates that the market momentum is progressively increasing. If it decreases, it means the market momentum is also decreasing. In other words, if it is within the positive, if it is the positive histogram, or if it is a bullish momentum bars, you'll see them increasing in size or in length. It will simply be meaning that the momentum of the bullish momentum is progressively increasing, meaning buyers are getting more and more aggressive in the market, and it is causing the market price to continuously and aggressively rise, okay, once you see the bars increasing. But the moment you see the bars beginning to decrease in length, it means that simply the market is losing momentum. The bullish momentum is slowly declining. It is decreasing, meaning buyers are losing momentum or aggressiveness in the market. And what does that signal? It means more traders now, the buyers who initially were causing a lot of ruckus in the market, are now beginning to plan or are already taking off some profits, resulting into less of the buying and more of the selling, or progressive selling and less buying, okay? And this will happen continuously until a point is going to come where the bars are going to drop below the zero line. Once it drops below the zero line, that's when we shall say the trend is already in a downward movement. And the length of the bars, okay, will help us indicate the strength of the market, okay? And normally what happens is that there will be a progressive increase in the length, just like we can see here, all right? Just like we can see on the chart here. Sorry, let me use this, okay? Just like we see here, that progressively, that any increase in the length of the histogram shows us that the momentum of the market is increasing. And depending on where the histogram are, you shall see a progressive increase in the length of the histogram. And because of that, it will also be indicating to us that progressively or gradually, the strength, Okay, if it is above, we shall be saying that the bullish momentum is increasing. Buyers are getting more and more aggressive. They are buying more. Okay, the market is very volatile and the buyers are in action and they're buying more. And because of that, they are attempting to push the price higher and higher. So each of the bar we see here corresponds to a candle. And we said a candle we see on the chart is a representation of a trading session. And these trading sessions are always termed as time frame. Time frame. They are called time frame. Okay? So in each time frame, we shall realize that a candle is printed and the candle will be actually telling us the behaviors of the traders within that particular trading session. Okay? It will tell us the strength or how aggressive that particular group of traders were. And it will, at the end of it, will also tell us actually which group of traders were dominants in the market. As at the end, we shall be seeing the color of the candle that will be printed. If it is red, it will be telling us within that trading session, the sellers were more aggressive or the sellers were dominant in the market. Okay, or the selling activity was more than the buying activity if it was to be measured. So as a result, the candle appears red. That is just in a simple way of understanding. If the candle ends up being green, it means that within that trading session, the buyers were so much dominant over the sellers, or the sellers, the buying activity exceeded the selling activity, resulting into the candle being green. Now, if you're to explain it in the technical term, it means that a green candle will be the trading session where the market price opens below and then closes above. At least it closes above the price at which that trading session opened at. Okay, so each of these histogram we see will be representing, will be corresponding to the trading session. If you understood that part before we complete your one on the chart. If you understood something with regards to that, mark D before we go into its application. Let me see a one on the chart. Okay. All right. Bongole, the two means what? You didn't understand? Yeah, in simple term, the green candle represents buyer. Red candle indicates seller. Simple. Yeah, that's a simple term. We say, as we always say, for us in our class, we don't want to complicate things. Yeah, it's not about complicating things. Okay. When I tell you that the green candle is representing a trading session where the buyers were dominant, you should now understand it's a buying candle, or a trading session which was dominated by buying activity than the selling activity. Just to simplify things, so that you go away from the aspect of say, a green candle is where now the close is like this and the open is no. Sometimes we simplify it, but in the technical terms, a red candle is a candle where the open is below the okay. It's above the close. Then for a red Okay, sorry. I got a call. So, all right. So, all right. So, looking at the MACD indicator. Okay. Looking at the MACD indicator, what did we say about the positive histogram? Let me see on the chart. What did we talk about? What did we talk about the positive histogram? Are you still not getting me? Can't you yet hear me? Okay. All right. Yeah. So I was asking, what did we say about the positive histogram? What do they signal? What do they represent? What do they show? What do they indicate with regards to the market or about the market? Mm, 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 mm. Ah. Okay. Yeah. Most of the answers are okay. They indicate a bullish momentum. Okay. They represent a bullish momentum. They signal a bullish. Okay. They tell us that within that market time frame, the price is on a rise. Okay. And for as long as the histogram remains above the zero line, just know the market is up there or it is progressively going up. Okay. But when you see it now going below the zero line, then we can confirm that the price is on a down trend or it is declining now. Okay. But when we see that the histogram is above the zero line, depending on this length, depending on the length, it will be showing you the momentum. Okay, it will be telling you, yes, much as the price is on a bullish momentum, but it is progressively declining, and that shall see through the decrease in the length of that histogram. Okay, now when when would be the best time? When would be the best time to trade using the MACD? Or how do you trade with the MACD? Okay. Now, just like so in the stochastic RSI, uh, and also relative strength index, how we trade in the using the MACD is when we identify, that is the first instance, when we identify a cross, when we identify a crossover. And which type of crossover? Which kind of crossover do we look out for when we want to trade? Which kind of crossover do we base on to identify entry opportunities while using the MACD? There is only one crossover, and the crossover where the MACD line crosses over and above the signal line. This is what I mean. You only make trade entry if you come across the MACD when the blue line is crossing over the orange line. Okay? That is when you make trade entry. It is even more perfect when you come across the MACD at a point when the crossover is just happening. It opportunity. Okay? As we can see that in most cases where the crossover happens when the MACD crosses over and above the signal line, we see a very good movement. Okay? we see a very good price movement in the uptrend. And we can just go through it. Let's just try to identify a few. We see here that when the crossover happened, if we can extend our line, we can see that here there was a good price movement. Okay, there was a good price movement, and progressively there was a good market rise. Okay, the market price rise. Another scenario where we saw a crossover was at this point, and if we are to extend the line, we shall realize that after this crossover, there was a good price movement. Okay, a good market price rise. Another scenario is here. Okay, we saw a very good price movement. That's the first instance. That's how you trade using the MACD. When you come across a scenario where the blue line, what we call the MACD line, is crossing over the signal line, that would be a perfect entry opportunity. Okay? Now, how long you stay in the trade will depend on how long the MACD line is running over and above the signal line. For as long as the MACD line is running above and parallel to the signal line, stay for as long as you wish. Meaning, you should be prepared to take more and more of the profit. Okay? For as long as the MACD line runs parallel and above the signal line. In cases like this, okay? In cases like this, okay? Cases like that, you can stay for as long as you wish. Now, the best thing that would happen to you is when you come across when the crossover has happened below the zero line. When the crossover happens below the zero line, after the market price having gone through a long period of downtrend, that present the most interesting entry opportunity. And you can stay even more and more 3 times longer in the market compared to when the crossover happens above the zero line. I repeat, the best opportunity comes when the crossover happens below the zero line. Because once it happens below the zero line, it means actually the market price would have gone through a long period of a downtrend. And now, by reversing upward, then that is an opportunity for you to make entry and stay longer, because by the time these lines are going to run parallel and above, the MACD line is going to run parallel to the signal line and above the signal line for some time, until it crosses the zero mark, it will be an amazing journey. It will be a long journey. Okay? That is when you make the. Now, how do you tell that the crossover may most likely happen soon or is about to happen? Now, that is always interpreted by length of the histogram and also by the color. Now, yesterday I talked about this color of the histogram, that sometimes you can customize it based on how well you think you will interpret it. Okay? What you see here is the default colors, but you can customize it in such a way that if you see a histogram within the negative zone, okay, of a particular color, it should give you confidence that, okay, this is most likely going to happen. An intense downtrend movement is characterized by a histogram within the zero zone, which is completely very red. But the moment you see the color changing from red to slightly pink, it means also the bearish momentum is continuously and gradually reducing. The moment you see it change to pink, it means it is really gradually reducing. And sooner or later, you'll be seeing it approaching the zero mark. Once you find it is closer to the zero line, you should even be more excited because something good is most likely going to happen.
okay, is most likely going to happen. Okay, and this should be accompanied by, what you're seeing here, that this line, first of all, should be approaching one another to a crossover. Okay, much as you'll be seeing the color of the histogram, changing towards pink, okay, and reducing in length, it should correspond by an attempt of a crossover, or it should be coincide with the blue line wanting to approach, okay, coming across the signal line. At least it should be corresponding to that. And also, you should look at the chart. You should look at the chart. Now, what should also accompany that analysis is, remember, we said when you want to use the MACD, you don't use it alone. You add in some flavor of either an indicator or a trend line. Now, you can also tell by what you're observing happening on the chart. Sometimes you may see a specific trend reversal candle forming. Okay, you may see a trend reversal candle forming. Majorly, the buying pressure candles. The buying pressure candles, I believe now you know them, that they are candles that signifies aggressiveness of buyers getting into the market to push the price higher. And a simple example of them is being, right, a hammer, right, or the hanging man. Okay, those are the key examples, or what we call the gravestone doji. Those are examples of buying pressure candles. Okay, so if you also see them on the chart, that should also increase your level of confidence of what you would have observed happening on the MACD in regards to momentum of the market getting lesser and lesser, and then also an attempt of the MACD line wanting to cross, the signal line through it's approaching one another, and then this should just increase your confidence if you sight candle, okay, a bullish signal candle. It should be important to do that. Lastly, it would even make more sense if you are drawn support and resistance, so that by the time you are increasing your level of confidence, it should come to a point where you have what we call an area of confluence, where most of the indicators are speaking the same language with your price action. Like if you had found when you had drawn your support and resistance, and also you realize that the candle is really approaching your support. Okay, it is approaching a support, but at the same time you're seeing the momentum histogram reducing in length, and it has also changed the color, and also the MACD line is approaching towards the signal line. This should give you a lot of confidence, and becomes more interesting if the crossover attempt is happening when it is below the zero line. This is a perfect combination of price action and indicators in technical analysis. Did that make sense? Did that make sense? Yeah, if I made some sense, if there was some sense in that, let me see a 2 in the chat. A 2, a 2. If it made some sense, let me see a 2. A 2. A 2. I've told you and I've shown you when you make entry and how best would use that to make entry. I'm going to repeat one last time and we shall call it a day. One last time. One last time. And I'm going to analyze. Now I'm going to do real action, real analysis. MACD. Let's watch this. I'm going to do this. I'm going to base on, first of all, what already happened. Then I'm going for the live event. I'm going to base on this. Had it been that I came across a scenario where the MACD, number one, the MACD line, where is my drawing tool? Where are you? Where is my drawing tool? Looking for, is my screen shared? No, okay. Let me share my screen. Okay, let me share my screen. Okay, so I'm going to take one scenario, then I go to the real to the live market. Huh? Let me just talk reference to what happened before. Okay, just let me make a reference to what happened before. And I'm going to do this. Allow me do this. Okay, yes. I just want to. I want to take this scenario. Yes. Okay. I just want to give. I want to take this. Okay. Now let's look at this. Hope we see this chart. Okay. Hope we look at this chart. Initially, I'm just giving as an example. Yeah. That this is what this is what we saw coming, right? I opened the chart and I found the market looking like this. Now, I have my MACD indicator. Let me analyze my MACD indicator. Number one, first of all, this is a downtrend market. It could be a retracement, or it could even be a reversal. But the most important thing that it is a downtrend movement. The market is on a downtrend because upon rising there, now we're seeing it going downward. And this could be a retracement, or it could even be a reversal to the downtrend. But the most important thing there is it is a downward movement in the market price. The price is decreasing. That is the first thing. How do I know? I come on my histogram. My histogram are printed below the zero line. And we said any negative histogram is a representative or is a representation of a bearish movement, a bearish momentum, or a downward market price movement. That's the first instance to give me a yes. Number two, on my histogram, there are two colors of candle already printed. The red one, which showed an aggressive dump in the price or drop in the price, and then a pink color of the histogram, which is showing me a gradual deviation, a gradual decline in the downtrend momentum, or in a price drop momentum. It's showing me that the color is no longer red, but it is pink. So it is showing me a decline in the strength of the market price drop. It is showing me it is decreasing. It is decreasing because the color has changed. The third thing, the length of the candle itself, of the histogram itself is decreasing progressively. This is not the same as what is currently being shown. Probably the next one may even be more shorter. That's a first instance of me even saying a yes and a yes. Three things. One, the trend is on a downtrend. How do I know? It's because the histogram is below the zero line. Two, is the trend coming towards an end? Yes. Why? Because I'm seeing on my histogram, the color of the histogram has changed from red to pink, which is an indication of a decrease in the strength of the price drop. Three, when I look at my MACD line and the signal line, initially they were parallel, but it's appearing as if it is approaching one another. They are converging, meaning they are tending towards meeting. And when they meet, what happens? Crossover. It's what I'm seeing here, right? It has bent. If you can see, it has bent a little, right? But I've not yet made an entry decision, but I'm just still analyzing the market based on my tool. The fourth thing there is I want to see if this statement, if this insight is true, what is my price action saying? In which area is my candle? Is it approaching my support? Is it on the support, or it is still far away? Meaning I would have to come here and try to draw my trend lines. Now, I will take this as the candle representing the ongoing trading session. So I'll use it as a reference to draw my first support and first resistance. Then I use it to draw my second support and the second resistance, so that I see where is the market price currently. Is it approaching or is it in my support? So that I can increase my confidence of what I foresaw here. Now let's go back. Let's come here. Let's pick a drawing tool. Put this. Basing on my current price, I'm going to look at this as my first swing high. Yeah? We're on the 1 hour time frame. Then, with reference to my price, okay. With reference to my price, market price, do we see this point? This is where the price is. Okay? Initially, the market price dropped. Now it is slightly rising because it is no longer, this was the last price it recorded. Now the green candle, the price is already there up. It is no longer down. So I would take this as an attempt of a reversal. So I'll consider this point keenly as also my first support, if at all. Pick this line, put it there. We say we draw this support and resistance based on real events that is happening. That becomes my support line. But how do I know that it is really a genuine support line? I must go back in history and try to track, is there any time in history where this line that I have drawn, market price reacted to it? Either was it a point where initially it was acting as a resistance or it was acting as a support? I just want to see the reaction of the price once it approached this line that I've identified. So to increase my confidence, I'll slightly go back in history. Let me even narrow this further. I can just narrow it to just gain more confidence. Mic check. Am I on? Check. Huh? Oh. Am I on? Am I still off? Am I still off or I'm on? Am I back or no? Okay. Am I breaking still? If I am, then I could go off again and see if I can come back and okay. If I'm audible enough, then let's finalize on that part. Let's finalize on where I was. Let's finalize. Let's finalize on that. Yeah, this feedback is equally very important, so that I don't speak to myself. Okay, so let's finalize. We're on the last phase. So I was saying that drawing this line could give us confidence. Okay, could give us confidence due to the fact that if we look back in history, it is at least at some point. Okay, yeah, the price reacted to it at some point. Now, what we would do here we would take interest in drawing the next support. So we make reference to this first support, and then we draw our second support here, right? That will be our second support, right? If we take reference to this first support. When we draw our first support, we made reference to the current price. So we saw this one being our first support. When we're drawing the second support, we make reference to the first support and that. Now, if you want to draw a third support, we're going to make reference to the second. So we look back with reference to the support 2, and the most recent swing low. So we also draw a line there. Now, why am I drawing this? I'm drawing this so that what I should be sure about is, in case I make entry at this current price, I'll measure the distance there to the first support, and that becomes the margin call drop for the first call. Okay, then I measure that distance to this, that becomes the margin call drop for the second call, and that for my third call. Okay, or I would just measure all the way there to this point. The percentage I get, I distribute it for my margin call drops. I can decide to divide it by 4, or by 3, or even by 2, or even by 5. It depends on what you would want, depending on also how big the percentage is. So let me try to measure what percentage that would be if I am to enter this current price. Okay, and I measure up to here. That would, if I take consideration of support 3, that would be about 4.9% drop, market price drop. So I can decide to
Coach
divide this.
Musa, I think we have lost you again. We have lost you again, if you can hear me. We have lost you again, Coach.
Okay. Oh. Okay. Let me rejoin. Let me exit and rejoin. Let me exit. Okay. Let's go back. I hope I'm much clearer now. I'm much clear. I'm much clear, right? I'm much clear, I believe. Yeah. Okay. Okay. Then that's good. That's perfect. 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 Okay. So I was making a statement here that what you can simply do is, if you opt to enter at current market price, okay, as indicated by that ongoing candle that is building up, you can decide to enter at current price, okay, and then measure the distance from point of entry to this first support 1, the support 2, and support 3. Okay, now the distance from point of entry to support 1 becomes the margin call drop for first call. Then the distance between the first call and the second, first support and the second support, becomes the margin call drop for second call. And you also do the same for the third. That is one way of doing it. The second way of doing it, you could just possibly measure your point of entry. From your point of entry, you measure that percentage all the way to support 3. Okay? Now, the percentage you get there, you can decide to either divide it by, this is already 5%, you can decide to divide it by 5 so that you can establish 5 margin call, or you can establish 5 margin calls, or you can decide to divide it by 4, or if by 2. If you divide by 2, you'll be having 2.5. Okay? 2.5. So you can decide to establish 2 margin call drops. Okay? I mean 2 margin calls. And then you set each call drop at 2.5, 2.5. It's just a way of preparing your mind. Because in your analysis, you saw that the market price may reverse. Okay? It's about to reverse, or you may have some opportunity to enter and make some profit. So that is what you do. Then any point from point of entry, you measure the distance from here to your first resistance. The percentage you get there is your take profit percentage. So like in this case, if we are to take this, if we entered current price, okay, we can take up to what? Up to 4%, 4.25%, if you entered current price. And if you enter only, that condition will only be fulfilled in case you enter the market and then the price immediately moves in your favor. Okay? But you enter and then the market immediately moves in your favor, you will be in position to gain 4.25%. However, if you enter and the market price tries to dip a little, okay, you may be out of the market probably around here. You may not even reach there. Yeah, you may not reach here, because if the market price dips a little and the robot buys, your average price will be moved closer to that particular market price. So meaning, in case the market price decides to move in your favor, you may quickly attain the 4% without necessarily reaching the initial point of measurement. Because of what? Because of the distance between the average price and current price, which would have been moved closer to each other. Okay? Yeah, you'll only reach this point if you enter and the price moves in your favor immediately. But if it dips a little and the robot buys, then be rest assured you'll be out of the market earlier, because your 4.25% will be probably around here other than that point. Okay? That is what you need to know. Now, why do you establish these pre-measurements? Because you want to see how the market price is going to fare. If you entered current price, that is what you should do. If you want to use preset price, probably you're going to set your preset price at this support 1. Okay? So that if the price dips to it and it picks up, it could go in your favor and you're out. So if you set a preset price at support 1, measure that distance to support 2 and establish that as the margin call drop for the first call. Then measure that to this and establish it as margin call drop. You can do that continuously. So there are different ways of doing that. Okay, it depends on what you feel comfortable in. Okay, now let's assume that is how our analysis went. We entered already at current price. We have set our take profit at 4.25%, and we have established our margin call drops. Let's see how the price is going to fare. Let's see how the market price will move, and we see if we shall be out or not. Because in RoyalQ, you trade with margin calls. That's why we have made those measurements and set it on our robot. So we assume it's already set. Let's see how the price is going to fare. You see, even immediately before I even oh God. So it was so quick. It was so quick. Okay, let's see. It has even hit the take profit. So that's how the price would move actually. We're in the 1 hour. That's how things will be faring. That's how the market will be behaving. So finally, you see that you're out of the market. You're really out of the market, even before. So we are going to see such kind of market movement happening together. But the most important thing there is we will witness that finally, this was our take profit. By entering at current price, we were out of the market because the next candle that built up, the next 2 that built up actually made us to hit the 4.2%. And eventually, of course, after this candle, the current price candle formed, we saw a crossover happening immediately. And that is okay for us. Okay? So that will happen like that. And that is just a picture. I wanted just to paint a picture so that we see how this price always tend to move if we're basing on. Now, another scenario is this. You know, so what is happening here? I want us to go and look at now real market price. We want to make reference to current price. Huh? I want to see what it is going to see as I delete these lines. But we see how the price is reacting to them. Okay. I want to see they're seeing, you see how they are reacting to those market price. So we are here. Currently, we are here. Now, from the look of things, we are in an uptrend. Okay. We are in an uptrend market because we can see here that the MACD lines is completely above the zero, but it has moved so far away from the zero, but it is on the verge of moving downward. So we want to see what we can, if we can still make some trade opportunities here. Okay. Because we said we gain confidence by what happens. So let's try to analyze. Let's try to analyze what is happening here. One, we said we identify the trend. Okay. We are basing on this. So let's bring this closer. We're basing on this. This is a downtrend, right? Yes, we can see what happened here. But at the end of it all, are we coming to the end of that downtrend? We are not very sure, but something is telling us that we are most likely coming to an end. Why? Because we are seeing a change in the color of the histogram. Now, probably the next one will be shorter than these two. So let's see what happens. Now, when it comes to this MACD, the signal line, we are seeing the MACD somehow is attempting to what? To bend towards the signal line. We don't know, maybe after 2 or 3 histogram, it may cross over and then we see a movement like that, right? But we can't yet conclude. What we have to base on, we have to go ahead and try to draw our support and resistance and see where the price is. So what we're going to do, we pick simply this, put this with reference to the current price. This will be our first support. Okay. Reference to the first support, this will be our second support. Then when we go to the resistance with reference to the current price, this will be our first resistance. Where? Here. This will be this swing high. See, this swing high would be our first resistance, yeah? So from the look of things now, we know that this could be our third support if at all we want to go for third support, okay? This point here. Now here, if we want to trade XLM, what we are sure about is we have from current price, we can either make entry at current from current price. So we can decide to take this measurement to the first support. That becomes the margin call drop for the first call. If you want it that way, then we can also have to this. If we take consideration of the two support, that means a total of 4.7. We can decide to distribute it into 2 or 3 or 4, depending on what you want. If you decide to go for the third support, that is up to a drop of 7.7. You can still you can still divide that by establishing maybe about 5 cents. 5 margin call drops and distribute the 7.7 to the 5. And then you see how many each margin call drop will have. That is in case you don't want to be specific by measuring the distance between the supports. Okay. Now, that is something to think about. Okay. Now, you will only enter at current price in this market situation, or you can wait for a drop. Now, who loves this kind of opportunity of trading within the smaller time frame, I'll just come and try to see. What is this? What is this again? Okay. So I was coming here. So sometimes you can, it is still all the way, it's still all the same, even within the smaller time frame of 15 minutes, which I'm now trading at or in, we can still see that you can decide to either enter current price or you wait for a preset, a drop, because this is the common support for both the 1 hour and the 15 minutes. Because I'm seeing a double bottom here. There was a double sub, there was a support, then there's a retest, and we're seeing probably we may see the third retest, or we may not see it at all. We may just see a failure swing, and then we have that kind of movement. There's a failure swing that may happen, and then we have that, or we shall see a third retest. Okay. Now, then we see some movement like that. But that is the picture of how you can make that measurement, determine entry and exit. Yeah. Look at here. Hey, in the 15 minutes, we have already crossed over, and progressively the momentum is increasing. As we can see, the histogram is progressively increasing in size, and it is the green, and it is above the zero. So we are moving, we are together. By the time we see that happening in 1 hour, here we may be somewhere. Okay, so briefly, that's just a picture. That's just a picture of how you analyze, you make analysis based on this indicator. You have to use it with a combination of another to make a perfect sense to you as someone who is analyzing the market. If you feel the MACD could be one of those indicators that may work for you, perfect it, practice it, perfect it, improve, become better. That is it. Continue doing more research about it, have more classes if at all, and then you'll be a super professional. You will make some good money basing on this. You will not have to wait for signals. With all that said, I trust the class was worth it, or it was worth it, and your time was not wasted in vain. Be part of the class. Thank you so much for being a good audience. If God wishes, inshallah, we shall see how we can move on tomorrow. I'll give it back to leaders in the house. Leader Mopiwa, if you have anything to say, a word or two before we conclude the class for today. Yeah. Yes.
Coach Musa, have anything on my side? Thank you so much.
It's a pleasure then. Okay, let's catch up tomorrow. God's willing. Have an amazing day and happy trading to all. See you in the next class, which I think, Coach Mopiwa, you'll be running that class, right? Yeah.
No, it's not me.
It's Mubiru. I mean, Sembatia.
I think Leader Mubiru is on the call. Yes.
Okay. That's fine. Yeah. So see you guys there in the next class, please.